Techstat from Forex Trading Unlocked, and this is our Forex market breakdown for the New Zealand dollar US dollar currency cross. So before we get into our analysis, let's cover some quick things we need to take care of. Here's our disclaimer, and it basically just lets you know that this video is for illustration purposes and educational purposes only. So with that, let's look at our chart that we have here for today, and it is the New Zealand dollar US dollar daily chart. Now, if you look off right off the bat, you see there is a little black square in the center of the chart. That is our target trading range over the next few sessions. The market is just opened up a few hours ago, and now we have some trading, and right now it is a little bit lower after Friday's big rally, which made a newer move high. So right now it looks like there's just a little profit-taking break going on. So the key thing to look at in this box is that the market settled just above a key pivot point. That one of those three yellow lines are three critical pivot levels. The center one is the one that the market settled right around on Friday, and now is trading a little bit below. And you'll see that the range of that box goes to the upper and lower yellow pivots. Now you have that dashed purple line there. That's a breakout level that's just above the high set from Friday. If the bulls can make another run for the highs, I would say that you're probably going to see a nice little surge there, and then it's going to pressure the upper critical resistance level there at 67.12. That's probably going to be the extent for this rally right now. Currently, the market is in a bear market. This is just a corrective move. Right now, there's been quite a rally to the upside over the past couple weeks, so there's most likely going to have a little bit of a digestive period. And the reality is that the rally has probably been fueled mostly by U.S. dollar weakness. So a lot of things have happened over the weekend with the Mexican-U.S. trade tariff talks that might give a little surge to the dollar. That may be a little reason why the market's a little lower for the New Zealand dollar, U.S. dollar right now. There's also the China-U.S. dollar tariff war that's going on, so we'll see what that brings over the course of the week. And with, I guess, the hopes are on the U.S. dollar side is that China will start to see the trend with Mexico and hopefully follow suit, or at least to some degree. We'll see what happens over the course of the next week. So that's probably why you're going to see the market stay in this target trading range. It may pressure that resistance to the upside, pushing the highs a little bit higher, but that's most likely the extreme that we're going to see for the current correction higher. And it is a correction higher because the market is in a bull market. There's no reason for us to believe that we have the market has bottomed. It looks like it is trying to start to bottom right now, but most likely it's going to digest a lot of the trading over the next couple sessions before it starts to really push any upside territories. Then there's also, as far as the downside, if you're bearish, I would be very reluctant to chase this market back down towards the lows that were set last month in May. Like I said, this target range trading box area, once you get down towards this lower pivot at 65.92, there's a lot of support there, and you're also going to start gravitating towards that lower blue line, which is the rising support line for the current rally and bull trend. That I see is most likely where you'll see a lot of support, and there's probably going to see, as long as the U.S. dollar has some nice trade wins as far as lifting the dollar again, like with what happened with Mexico, and especially if there's some positive news with China, then you most likely will see this New Zealand dollar, U.S. dollar trade a little bit lower as the dollar gains a little bit of strength. Now, unless there are some really major confirmations of tariff deals done, that just means a short-term little bout of strength for the U.S. dollar, and that would just mean a little pullback and profit-taking off of this current rally, which would be not out of the realm of possibility, even if there was no news that was fundamentally driving these currencies. The rally right now that's happened over the past week and a half is due for a little pullback and for a little profit taking, so it is probably in a buy dip scenario. I would like to see the market pull back towards the lower end of that target trading range box, and then I would think that you will see it bobble from that little area back up to where it is currently trading and maybe make a run at that purple line, which is our breakout level. That breakout level once it hits there, it's just a little bit higher towards that 67.12 pivot. That would be the confirmation for a breakout, and any close above the purple line, or definitely the upper yellow pivot line, would most likely indicate that the bullish momentum in place is very solid, and that any pullbacks after that would be most likely just a bearish correction off of a short-term new bull trend that is emerging, and could continue for the next month and a half into actually the end of August into the fall, especially if the upper levels are pressured. You have that descending blue line up at the top of the chart that comes off of the weekly chart, and that area probably would be your target area over the longer haul as we move into the next couple months, if this new bounce higher is actually at the beginning of a bull trend. So we'll see. Right now, it's the market has bottomed, and there's a little short-term relief for the New Zealand US dollar trade, and we'll see what's going to go on as far as the news. But right now, I would say the New Zealand dollar is a short-term bull as the US dollar falls under pressure, and the big range trade is highly likely going to emerge over the next few sessions, for sure, at least. Towards the end of the week, as numbers come out, that might be when you start to see it pressure the upper or lower extremities of the trading range. 66.86 should have the bulls pressing that 67.12 level, and 68.78 is the extended upside target if there is some surge where the dollar weakness starts to come into play. For instance, even though we have a deal or a tentative deal with Mexico, the tariffs are going to be put on hold that we're supposed to be imposed starting tomorrow, actually. If China starts to try and flex some muscle this week, then you probably will see another fuel of buying pressure in this New Zealand US dollar market, which would then fuel the rally above that critical resistance area. The upper extended target of 68.78 probably would be something that would take, I would say, a few weeks to emerge, if not a whole month to emerge. But that would be if we have a real hard stance where the US dollar really seems to be under pressure. Right now, the dollar index has been only coming back for the past week and a half, and you got to realize when that market's on its highs, it needed to pull back. So this is just most likely, at least in the short run, just a corrective profit-taking move. So be very careful fading the dollar. So even though the New Zealand dollar, if there's fundamental factors and economic numbers that favor the currency cross, remember that dollar weakness is most likely driving this rally. So until there's anything that really confirms that that's not the true variable that's driving this rally, I would use caution. Being a bull, keep your stops tight, and like I said, look for these first couple pivot points for targets, and after that, I would say you give the market a chance to digest the trade, unless you're riding along, in which case definitely lift your risk and realize that you're probably going to see a pullback that will come back to that lower key support pivot. And then we'll see if this rising blue line that is the current bullish trend slope, if that will hold. If that can hold and the market especially stays above that 65.92 level, then I would say that the digestion is just what is common in all markets. They're not going to go one way. It's just a little bit of a digestive phase, which then gives the bulls a chance to really build a base that if it challenges that critical breakout resistance level or breakout level, that you will see it not only just challenge it, but over the course of a week or two, once it does that it will continue to trend higher and start a new and confirm a intermediate bullish trend for the New Zealand dollar US dollar currency cross. So that being said, look for tomorrow's trade on Monday to still pressure the support areas. I would say that don't get overzealous if you're a bull and that the market's running out of steam. Just try to keep your risk tight, and if you're a bear, I wouldn't start to get too happy about any lower trading action over the next evening into the Monday day's trading range, because, like I said, this is most likely profit taking, and it would be any weak shorts have a high percentage chance of getting caught over the next couple days if any buying pressure starts to come in. So that being said, if you are going to be using, if you're a bear, I would use that that purple line, that critical breakout level or the critical resistance level, as your risk. Anything beyond that, that's when you're going to start to run into some serious trouble. Because if the market is a strong bid in that area, then I would most likely say that our pivots that we have in place right now are going to get raised up towards above that upper yellow line that we have right now at 67.12. So right now those areas will become support, and the area where the market's at right now is most likely not going to be touched for a while. On the opposite side, though, in case there's any numbers or any news that radically comes out strong in the US dollar, then in that case, then I would say, especially if you get a close below 65.92, that you'll have a test of that rising blue support line, and after that, then you're looking at for the lows to be tested. So that's what we're looking at, the snapshot for the market starting off this week, and we'll see what happens. The news there was a lot of economic numbers that came out in the U.S. for unemployment and stuff like that, as far as kind of near missing and not quite as strong as they were looking for. But once again, like I said earlier in this analysis, the US dollar bulls have been raging for quite some time. So when you're coming off your highs to pull back, that doesn't mean the market's turning. It just means that it's coming off its red line, and it's just starting to just digest the recent market action. So with that being said, I would say we've covered all the bases, and that big box, once again, is your target trading range. You also have to take into account that we do have option and futures expiration for the June contracts for currencies and other financial derivatives. That causes a lot of market jitters as well, which that puts the markets into very likely range trade scenarios. And so that being said, even though the New Zealand dollar, US dollar doesn't really fall into the futures mix that much, the US dollar does with other major currency crosses. And since the New Zealand dollar is one of the lesser majors, it is impacted by that time frame. So that with those variables, if that's really the case, and that's going to hold true like it does often during this time period, during the middle part of June that we're heading into, I would say that if you are trading any options, or you have, or if you want to fade the bulls and the bears, then selling into that high area of that target trading range or buying into the lower end of that box there would be the levels to look to capitalize off of. And that would mean that the market stays basically between the 65.92 up to 67.12 area, which is very, very likely. That could be the scenario right now. If you look back on the chart, that there's a lot of trading over the past month and a half that has been in that range. And it's also where the market has digested lows and highs while it's trying to figure out its direction. And if you look back also on the weekly and the monthly, it also covers a lot of trading action in that particular area as well. So it's very comfortable trading in there. So like I said, once again, for options traders or for those who want to fade the move now, as far as if you're bearish, look to sell it higher up. And if you're bullish, look to buy a dip, and then also look for the market to gravitate to pretty much where it is right now. So you wouldn't be out of the realm of possibility that over the next couple sessions that you see the market pretty much settle right around this 66, 61 area. And also, just to let you know one thing also, at the very beginning of this trend where the lower sloping blue line begins, that is a Japanese candlestick pattern with the bullish engulfing line. That buy signal triggered the first new move high, a little short rally, and then the market came back to try and come back and test those lows, but it failed to do so, and that was when the bullish momentum surge began. So that being said, because a high probable Japanese candlestick pattern initiated this rally, that gives me some indication that not that the market is truly bottoming, but that this corrective move has a very solid base, and that would be an area where, unless you are super, super bearish, that probably is an area that will be the low for the next month and a half to 2 months. So even if the market falls under pressure, it's most likely going to stay above that rising blue support line. Unless, like I said, there's some major factors that will give fuel to the US dollar. We'll see what happens over the next couple of weeks, and who knows, if we have a sell signal that's indicative of reversing the trend, then we'll look for something different. As far as the total range and target for that buy signal, the market has pretty much hit the range and the target range. And if you go for an extended target, it's actually just above that upper pivot. So if you were to have acted on that initial buy signal when this rally started a couple weeks ago, you would already be out of your long trade. So if you're bullish, that's why I'm saying that this is probably just a corrective move. At least in the short run, it is definitely only a corrective move until it proves otherwise. And that's what we kind of need, is we need a range trade to develop, have a little basing, and then make another run at resistance. And then we can say that the short-term trend was not just a corrective move higher, it's actually the beginning of a short-term or intermediate-term bullish trend, which will probably follow through towards the end of July and into August, and maybe throughout the whole summer and into the third quarter of the rest of the year. So with that being said, I want to thank you very much for your time, and we hope that this analysis has been helpful for you. And just in case, if you really liked it, and like I mentioned, that high probable Japanese candlestick pattern, that happens to be the name of a book I wrote that's available on Amazon, on Kindle and paperback. The title is High Probable Japanese Candlestick Patterns, and it's useful for Forex traders, futures traders, stocks traders, options traders, you name it. And you can use it in multiple markets, or you can use it for correlation trades, where you get a signal in one market, and knowing or having an idea of what that market will do will give you an incentive to trade one way or another in another market. So, and that's all covered in the book as well. And so on that note, I would like to say thank you once again. Good luck in all your trading. Make sure you stick to the plan, use stops and proper money management rules. And we look forward to bringing you some more analysis. Please like, follow, and share this video. We're trying to build up this channel and figure out when we can figure out a normal schedule that will be conducive for different FX traders around the globe and different currency crosses, and see which ones I have the most interest. And any questions, shoot us some stuff on our chat room, and we will try and get back to you as soon as possible. Thanks a lot.